Hello, how are you? This is Ara Memorian, co-founder of the Spring Team, along with my partner Ryan Wykes, who maybe I'll figure out a way to put on this green screen here, or you're just going to watch me with this green thing behind me the entire time. I'm not sure. I'm new to this long form video stuff, so I don't have Instagram to help me edit this stuff, so we'll see what happens. Okay, so welcome to week 123. What does week 123 even mean? If you haven't paid attention to my blog for the past 123 weeks, we are the only team in Toronto that's been tracking our specific markets, the markets that we serve, every single week, week over week since COVID began in March of 2020. I learned a very long time ago that monthly data, month over month information is irrelevant to the person that is buying and selling today in a rapidly changing market like we have now in Toronto. If you're a buyer, you know exactly how fast things are changing. Some properties are going into multiple offers with 10, 12, 13 offers. Some places that you thought would be selling really, really fast are sitting on the market. This video is not going to dig into why those things are happening. This is more of a high-level market report, but I would love to talk to you about those things. So just go to the blog, springteam.ca, where you can read all this information and, send me an email, or we'll start the conversation one way or the other. hello@thespringteam.ca or ara@thespringteam.ca, or on Instagram @aramemo or @thespringteam, or find any one of our team members. We're all there to help. Okay, so week 123, so 123 weeks in a row. And you know what? I'm pretty good at spotting trends so far. We have clients that are, at the point where they're like, hey, Ara, let us know when it's the time to sell. Let us know when it's the time to buy. Now, what do I always say? Well, you might not know this, but what I always say is, if you read the blog, you know this, you can't day trade real estate. So there's no, swing trade it. There's no, there's a bull market or a bear market. Even though I've used those words before, I use them kind of lightly. Real estate is housing. You can't day trade housing. Sure, there's money to be made. There's money to be lost. But most losses that a lot of your Twitter warrior realtors or your favorite TikTok anxiety-inducing real estate enthusiast will tell you, prices are up and prices are down. And if you bought in January and February, yeah, you might have a property that's worth less today. Not worthless, worth less. You have Toronto real estate. You've got a piece of a pie that everybody in the world wants. So just be patient with it. Just wait it out. You will be ahead long term. I promise you. Patience is the name of the game here. So the main topic of today's market report, or this week's market report, is that as of tomorrow, we are likely to be in a position where we have the highest Bank of Canada's overnight lending rate that we've seen since 2008. How that matters to you is that, so if a bank is borrowing money at 2.25%, which is what their lending rate will be tomorrow, unless they surprise us with a lower than expected increase, hopefully not a higher than expected one, but we'll see. That means that you will be going into a bank or speaking to your mortgage broker, and they're going to be telling you that the bank's prime rate, meaning the rate at which you can actually borrow money, will be 4.45%, an increase of 0.75%. So we're finally over that 4% mark. And if you qualify, if you are a responsible human being with good credit and good equity and a good amount of down payment, or even not so much of a down payment, because listen, if you have less than 20% down, these mortgages are CMHC insured, meaning banks love those. They're super safe. You often qualify for the best rates that way as well. You'll be getting a prime -1 type of product. So 4.45 comes down to 3.45, and there's your rate. There's some cheaper variable rate options as well. Some people opting variable, some people opting for fixed. I'm not an expert in that department. I've always gone variable and I've always been ahead, but I've also been a real estate owner since 2007 during a time where, it's been fairly comfortable, a comfortable interest rate environment. So very different story going forward. Speak to your mortgage professionals about all that stuff. And then let's fast forward to September, where we're likely going to have another increase of what's expected is 0.5%, but perhaps that'll be 0.75 again. Perhaps it'll be less. I don't know. All we know is that increase is coming, and we're getting close to a 5% bank prime rate, which gives you the best possible 4% type of situation for your own personal mortgage if you qualify for a prime -1 product. So the main point of this conversation is we're going to be north of 2% as an overnight lending rate for the first time since 2008, 2009. Usually what that rate environment triggers is a recession. And during recessionary periods, there's usually downward pressure on interest rates. So I do not foresee a long-term consistent increase of interest rates through 2023. It's just too damaging to the economy. And Toronto specifically has handled these times better than a lot of other communities. And remember, when I'm talking about monitoring our markets for 123 weeks in a row, I'm not just taking Toronto Real Estate Board data and regurgitating it like a lot of our favorite realtors online do. That data is usually too broad. You can't really gauge how the market is doing in urban Toronto by looking at GTA figures. You can't tell me how a house in Leslieville is performing by looking at the entire 416 or the GTA. It's just impossible. This is why I decided to take the Toronto Real Estate Board information that they give you, and I decided to just look that stuff up in real time and break it down to the specific communities. So when you go to the springteam.ca and you're looking at the charts, and I'm talking about urban markets, downtown and surrounding areas, to me, that area is the border of the beaches, so around like Victoria Park, to the border of Toronto Etobicoke, Danforth Bloor to the lake. That's a pretty big area, and I think identifies and represents urban Toronto pretty well. And in those areas, we've had a consistent supply of houses and condos for sale. Since, let's say, mid-March of this year, so 2 years after COVID, we've had a consistent pile on of supply coming out of an environment in December, January, and February of last year that was severely undersupplied. So remember that huge area I mentioned, like Victoria Park, Danforth, Bloor, Etobicoke to the lake? In January, there were just over 200 houses for sale. Now, 592 as of this morning when I did this at 6:30 in the morning on the 12th of July. Probably a couple more right now. But what my point here is that over the past, so this pylon of supply stopped about 4 weeks ago. So we stopped piling on with houses and condos in all of the neighborhoods that we track. If you scroll through the blog, you'll see those 5 neighborhoods. They stopped piling on about 4 weeks ago. We reached the second highest level of inventory for houses available for sale in our urban markets next to November of 2020, about 4 weeks ago. Since then, we've been pulling back. Sellers either have not been getting the numbers that they wanted and taking their properties off the market, or new properties have not been coming to market. Why? Perhaps, remember, this is still the summertime. People are chilling. There's time, people are taking off. So people do that. So what this tells me is that Toronto is not full of a bunch of panic sellers that will drop anything they're doing at the slightest hint of economic turmoil, list their properties and drop their pants on price. That is simply not happening right now. There are too many reasons for people to be here, for people to stay here, and for people to hang on to their properties. All industries are based in Toronto. All major industries have huge hubs here in Toronto, from tech to crypto, healthcare, film. All of these industries have big presence here in Toronto. Another great, huge company yesterday announced their Toronto, they've gone all in on Toronto. I put that on my Instagram stories, RMMO, you can go check that out. Either way, there are too many reasons for people to be here and stay here. Everybody in the world wants to come here and be here and stay here. And if it's not their primary home, it's their second home. Toronto is finally on the radar of the entire world. We're being watched by everybody. So right now, we don't have a supply problem. That's not why some properties aren't selling. You're gonna hear some real estate agents talk about, well, these properties are getting terminated after being listed and then being relisted. And they're somehow using that as a signal of a bad market. What that signals is that the strategies of January, February, March, early April of severely underlisting a property and expecting a ton of offers and going way over asking, those days are over for most properties. We sold a semi-detached house 6 weeks ago with 13 offers. But then we also had a detached house on the market that was beautifully done that's still not sold today. So it's very specific what buyers are looking for. And if you don't deliver exactly what they're looking for, they're gonna go to the next option that is. They've got a ton of options out there right now, but it's not oversupplied. The reason why we have the slowdown that we have is because of buyer sentiment. Some buyers are on the sidelines and some have even been removed from the market. It's like, where are these buyers going? To the rental market. And that's why the rental market is absolutely insane. And which leads me to the opportunities that exist. And I think I talked about this last week. Not that I know. I talked about this in last week's report. The opportunities that exist today, the opportunities that really always exist in the marketplace are always in the assignment world. An assignment is when somebody buys a pre-construction unit, and I have a link to this on the blog where you can kind of read more deeply what it's about. So it's somebody who buys a pre-construction unit, they don't want to close on it, so they sell it before closing on it. They flip the paper, essentially. We have right here on my desk right now, I have a bunch. One of them is even 20 grand under what the person paid for it. no big deposit required now either. There are a whole bunch at near original purchase price or just a little bit more, but far better than resale pricing right now. Where I'm getting at with this is if you can get yourself a condo on assignment right now that's close to occupancy or even in occupancy, the rental market is absolutely insane. There are people beating down our doors. We had 10 offers on a rental yesterday, 4 the day before. We haven't kept a rental on the market for more than 24 hours for the past month. So if you are a landlord, number one, and you have a unit that is not rent controlled, so it was occupied for residential purposes on November 2018 or later, you need to issue the N2 notice, which allows you to increase your rent to catch up to where the market is right now. We're doing this every single day with all of our landlord clients. Unfortunately, if you have a rent controlled unit, I would wait until January when the new 2.5% increase kicks in, and you can give that increased notice in January. Now to take effect January. By October to take effect in January for 2.5%. So the rental market is absolutely insane right now, which is actually resulting in some cash flow opportunities which normally don't exist in Toronto's urban markets, honestly. The reason I love investing in Toronto's urban markets is not for cash flow. Somebody who invests in rural Ontario who's cash flowing like $1,000 a month on their property, but they're not getting much appreciation. In Toronto, we tend to leverage that appreciation and forego cash flow for appreciation, for safety, for security, for not as much market play when the economy is kind of doing whatever it's doing right now. So that's really what it's all about. Like a positive outlook for the long-term future always is what real estate investors have, all successful ones anyway. The people that I find complaining about the market are ones that either aren't invested in real estate or they missed out on an investment opportunity, so they're just kind of bitter and they like to spread that bitterness around. But generally, all of the successful investors that I talk to, they're buying right now, and they're buying assignments, they're buying resale condos, and they're buying freehold properties, as many as they can. This is a massive buying opportunity right now across the board. Does that mean that your property is going to start increasing in value tomorrow? No, but right now there's way less competition out there, and there's some good product that's sitting. So it's your opportunity to get out there and buy stuff that would have gone way out of hand back in January and February. And remember, we're not day trading this real estate. It's impossible to day trade real estate. And that's not some sort of marketing tactic I'm telling you so you can buy to line my pockets so I can buy something to flatten out my green screen. It's not what I'm doing at all. But some might lead you to believe that. I was even made fun of on TikTok by a local agent in my market, actually, for using the line, "You can't day trade real estate," saying that it's some line that I use to dupe people into buying real estate. I'm still pretty sour about that. Hopefully I don't mention it in every single video, and I'll find a way to call her out when I'm more comfortable here, but not yet. So then we're talking about listings and the prime rates. What else are we talking about today? You know what? I think that's about it. We've gone for 13 minutes. Let's call it a day. I want to hear from you guys. Make sure you've subscribed to the email list. I'll put all the links below. I'll try and get some stuff behind me on the screen so this all makes sense. And I'll see you next week. Don't forget to subscribe. Adios.